their CPA. I'm not talking to their CPA directly most times, but what I found that is that there are a lot of overlooked tax strategies that, just your ordinary CPA doesn't know about. What would you say are the most overlooked tax strategies that, high income earners who are already on property overlook and don't even take advantage of?
Yeah, I mean, I would say, when I talked about how over 40% of returns we review are not optimized, usually around a couple major errors that I see. One is depreciation, right? So as real estate investors, if you're someone who already owns real estate, we can take a paper write off on the purchase price of the building over time. And 9 times out of 10, I typically see just the regular depreciation taken, when in reality, there are so many different ways that you can look at depreciation for a property to optimize it. There are ways to accelerate it. And then I think just the ability to use rental tax benefits against W-2 and business income. That's where an opportunity area we see missed quite a bit. So depreciation is super amazing because it is one of those things where if you made a mistake, you can go back and fix it and catch up for what you didn't do in the past. And I think the other big mistake we see is just, not being strategic about what are the different ways I can actually use my rental tax benefits to offset different income sources I have from my job or from my business.